At Opportunik, we recognize that access to financial growth should be universal. This belief drives our commitment to creating a private wealth fund designed to unlock prosperity for Africans across the globe. Our focus is on making investment opportunities accessible, regardless of geographic location. With a starting capital of $1,000, the Opportunik Global Fund provides USD-denominated investment options to investors, intending to build long-term wealth across generations. The Opportunik Global Fund, OGF, operates under CIMA regulation with headquarters in Mauritius and offices in Nigeria and Kenya, and is managed by a team of registered, experienced fund managers. Our investment approach centers on an alternative asset class strategy, targeting non-traditional assets to deliver consistent, robust returns. This approach mitigates exposure to currency fluctuations and political instability, providing our investors with greater investment security. Opportunik is a private fund, available exclusively to qualified investors. Visit www.opportunik.com. Opportunik, Africa's global fund.
One of the most respected and highly rewarding careers in the world is in oil and gas. You work hard, you earn well, and you keep the lights on across industries, across continents. But here's the truth. High income doesn't always mean long-term wealth. Many professionals in the oil and gas sector find themselves unprepared when the boom ends, because earning is not the same as planning. Prosperity is not automatic. It must be built brick by brick with intention. The same principles that apply across industries applies to you too. Build in the harvest. Prepare in the sunshine. Invest in good times before the dry season comes, because it always does. At Opportunik, we partner with African professionals like you to design long-term wealth plans, secure family legacies, and build retirement portfolios that outlast the cycles of oil prices and geopolitics. So, talk to one of our advisors today. Let us help you turn today's income into tomorrow's prosperity. This is your moment to invest while others wait. Invest in what others miss.
Wow, what an opener. Thank you very much. Ladies and gentlemen, it is with such pleasure that I welcome you to Opportunik's Life Investment Webinar, themed From Oil to Wealth. My name is Itoa from Opportunik, and I am your moderator for today. Once again, welcome and thank you for joining us from all across the globe. Nigeria, the UK, the US, Uganda, Kenya, South Africa. We see you, we appreciate you, and thank you for joining our webinar session today. And we hope that you're going to have a very, very insightful session, as we have so many insight packed for you in our webinar for today. Before we go into the session, we would like to know our participants a bit more better. And what we would like you to do is, please, in the chat box, please do share with us your country and the sector in which you work in. I would take a look at the chat now so I can see the responses that we have on there. Okay, I can see Tinuola from Nigeria. Welcome, Tinuola. You can as well share the content, the sector and in which you work at. Okay, I can see Josh. Josh works in the financial services. Welcome, Josh. I can see Mohammed. Mohammed works in Nigeria, is from Nigeria, and he works in the oil and gas stream. Okay, I can see everybody sending in. I'm seeing a lot of Nigeria actually. I can see a lot of Canada. I can see a lot of oil and gas. Thank you very much. Please keep your country and your sector, please keep them coming. We'd like to see them. Okay, I can see healthcare. It's amazing to have people in the healthcare sector here. I can see construction. I can see education. Oh, interesting. I can see tailoring. That's very unique. I can see banking, lots of financial services, lots of oil and gas. That's very beautiful. Okay, I can see education also. South Africa, Victor from the UK as a financial analyst is very amazing. Please keep your country, your sector, your industry, please keep them coming. We'd like to see and know the country in which you're joining in from. Okay, I can see Jesitola from Nigeria. Welcome, Jesitola. She works in the financial sector. I can see Benga from agribusiness. Welcome, Benga. I want to assume that you're joining in from Nigeria. I can see Oluwa Bukumi. She's joining in from Nigeria and she works in the mobility sector. I can see Pascal joining in from Lagos, Nigeria, works in the oil and gas stream. Welcome, everyone. Please keep your countries, your sector, your industry, please keep them coming in. Please keep them coming in. Oh, I can see Thank God from Lagos, Nigeria. It works in the real estate sector. I can also see Godwill. Godwill works in the financial services sector in Nigeria. Thank you very much. Everyone, please do keep your please do send in your country and the sector that you work in. And it's very amazing and beautiful to see that we have participants across different countries, participants across different sectors. It is beautiful to see that, we don't just have people within the oil and gas space. We have people cut across, the financial services. I've seen tailoring, I've seen education, I've seen healthcare, I've seen real estate. I can see IT business. I can see IT business, I can see agribusiness, I can see mobility, and I can see corporate administration, I can see real estate, financial analyst. This is very encouraging sectors and beautiful sectors, and it's very amazing and good to see that we don't just have people or participants within the oil and gas space. We have participants cut across several sectors, streaming in from different countries. I can see the UK and Ghana. I can see Canada also. I can see South Africa. I can see UK. I can see Tanzania. I can see very beautiful. I can see UAE. I can see Botswana. Please keep your countries and your sector coming in. We'll love to have your sectors. We'll love to know the country in which you're joining us from. We are excited. We are excited to have you on here. We are excited that you are joining us from your countries and the sector in which you are joining in from. Once again, thank you very much for joining our session and welcome once again to Opportunik's Life Investment webinar, themed From Oil to Wealth. We have a very fun activity now, and it's called the Icebreaker, and which we have themed Guess the Country. Because we have lots of participants joining in from different sides of the country, we thought to put together a very engaging activity, to ease us into the session, and it's called Guess the Country. On your screen now, you see different countries. Oh, I've not even started, and people are starting to guess the country. Oh, I feel like everyone has gone ahead of me. Okay, Kenya, everyone is literally in the comment section typing Kenya. Lots of Kenyas, lots of Kenya. So everybody, we are winners. We've gotten the first one. So let's see the second country. The second country, let me spot my first winner. Okay, I found the first person. The first person is Ebubechukwu. I hope I pronounced your name very well. Ebubechukwu typed it first. Ebubechukwu typed it first. Thank you, Ebube, for being the fastest typer, because I can see a lot of South Africa, but Ebube sent it first. Oh, I can see Gambia. Oh no, it's not. I can see Gambia. Someone had sent in Gambia. I can see Ethiopia. It's South Africa. Thank you, Ebubechukwu, for sending it first. And thank you, everyone, for sending in South Africa. Those are sent in Kenya. Those are sent in South Africa. Thank you very much for engaging. So let's see the next slide, and let's see the next logo and see if, we'll also see a fast typer. Okay. Kofi got the first two. Kofi sent in the response first. Well done, Kofi. I wish I have a clapping sound. I would have put that in here, but well, thank you, Kofi. Kofi got it first. Oh, I can see Egypt. This is not Egypt. This is not Dubai. Okay, I can see Algeria. I can see Egypt. The answer is UAE. Thank you very much, Kofi, for getting it first. So we have another flag, and let's see who will get that first, because everybody is literally getting it right now. And okay, Oscar, I'm clapping for you on here. I can see that Oscar sent in his response first. Thank you, Oscar. Oscar sent in the flag represents Tanzania. That's what the flag represents. And yes, everybody is sending in Tanzania, but I see that Oscar sent in Tanzania first. So let's see the next flag. We have two more flags, and then the next flag is a catch. It's honestly a catch. It's a catch. It's a catch. Albakwe sent in the UK first. Thank you very much, Albakwe, for being the fastest typer. Thank you for sending in your response first. You were very quick. Thank you. So yes, this is the UK. Thank you, Albakwe, and thank you for everyone who is participating in our icebreaker. For now, we have one more flag, and yeah, we have one more flag. Let's see who will get that first. One more flag. Oh, Gori has gotten it. Gori sent in Qatar first. Thank you very much, Gori, for sending in the response first. And that is all the flags that we have for our icebreaker. This was fun. This was engaging. I love that the comment sections are, it's bubbling. People are sending in their responses. Thank you very much. Thank you, thank you, thank you. This was fun. And once again, if you're just joining us, my name is Itoa, and this is Opportunik's live investment webinar, Team from Oil to Wealth. Once again, my name is Itoa, and we're welcoming you once again, and we're saying thank you for joining our webinar session. We just had our icebreaker where we played a game of flag, guess the country, and as you can see, the comment section was very engaging. We had countries from Qatar, Tanzania, Kenya, on and on and on like that. So before we go into our next phase, our next session, we have a bit of housekeeping information to share with you. So we have a list of housekeeping, just a few information here and there that we'd like to share with you before we go into the webinar session. So first, as you can see on your screen, is to please stay mute unless you're speaking. If you have a question, there's time for questions where we would allow our participants to send in their questions, thereby if you need to speak or not. But please, while the session is going on, please stay mute unless you're speaking. Second is that we'll launch a poll shortly, and we would encourage you to engage with the poll and share your responses. Third is that we have a live Q&A session. So if you have any question in the course of the webinar, there's a Q&A icon at the bottom. Please do well to drop your questions, and we'll definitely pick that up and respond to you. And lastly, we love to hear feedback. We love to get your comments. We love to get your insights. So if you have any comment for us, any insight for us, any feedback for us, please feel free to drop your key takeaways in the chat box. Thank you very much. And now we are going to take a poll, and I would encourage everyone to please engage with the poll. It's for us to know our investors better, because if you're on this call, we believe that you're either an investor, an aspiring investor, you want to become an investor, you have the goal to build wealth, you have the goal to, get into investment. So you would see a poll right now. There are 3 questions, and we're going to leave the first question on the screen. So please take the poll. Let's all engage on the poll so we can get as many responses as possible. Okay, I can see that the first question says, how familiar are you with alternative investment options compared to traditional investment in the African context? So please, let's drop in our responses. Let's engage with the poll. Let's engage with the poll. Let's send in our responses. I can see that not very familiar is topping the chat right now. Not very familiar is topping the chat right now. Please do send in your responses. Please send in your responses. Okay, we have about 190. We have 190 participants on the call right now, and we would encourage everyone to please engage with the poll. We're just going to give this couple more minutes, and then we go to the next question. Okay. So we have 64%. 64% is 64% is very amazing. Okay, 165 right now. Please let's keep the engagement going. This poll is going to go down. The first question is going to go down in like a couple minutes. I want to see if we can if you can get about 70% of people having to participate on the poll. It will be very, very nice and encouraging. Okay, but for the first poll, actually, we have not very familiar. So, from the metrics I'm seeing on here, not very familiar is topping the charts. And, I'm sure that by the end of this webinar session, definitely you have an idea, about Opportunik and our alternative investment. So yes, please, let's keep the poll going. Let's keep the poll going. Let's keep engaging. Thank you very much. So I think we can go to the next poll right now, so that I can, we can run through that and also go to the next poll. So let's see what we have on here. Okay, so for the first poll, the question says, how familiar are you with alternative investment options to traditional investment in the African context? The first is very familiar, somewhat familiar, not very familiar. Okay, we have a second poll now. Participants, please, let's engage. 0 persons have engaged. Please send in your responses. Please send in your responses. Investment preference. So we just want to know, in terms of investment, where do you like to put your money in? If you have that quote unquote money that you set aside for investment, what will you use it for? What do you want to use it for? Do you want to invest in stocks? Do you want to invest in bonds? Do you want to invest in real estate? Do you want to invest in mutual funds, or you don't want to invest in anything? I can see 5 people saying, okay, I can see 10 people saying they don't want to invest in anything. That's some sort interesting, but it's also encouraging. I can see the numbers. Okay, I can see that stocks is taking the lead. Please, let's send in our responses. Let's engage with the poll. Before we get into the session, we would definitely love to have this information. That way, we know that, this is the numbers and this is the insights that, we are working with. Investment preference, please send in your polls. Please send in your responses. Please send in your responses. Please send in your responses. Okay, I can see something clearly. So the second post says, what investment class do you currently invest in? Thank you very much, Modupe, for spotlighting that. My bad. Thank you very much for that. So it says that, what investment class do you currently invest in? Right now, where is your money? If we're saying that, okay, hi, Modupe, can you share with us what you've invested in? Would it be stocks? Would it be bonds? Would it be real estate? Would it be mutual funds? So what are you investing in right now? I can see that stocks is taking the chart. So a lot of us have our money invested in stocks, which is good. It's good to see that that's topping the chart. Also, Olubusoye. Oh, that's fine actually. But you can tell us in the comments, in the chat box, which you have your money in. If that's fine by you, you can, just drop in the chat box. Since you picked none by mistake, you can just let us know that in the chat box, and then we'll just count you among the metrics. But for now, what we can see on here is that the stocks market is taking the chart, followed by mutual funds, then followed by real estate, and then bonds. I can see in the charts, people have their money, our participants have their money in stock markets, and that's also a very good decision. Actually, it's a good spread. Well done. And then we have our last poll, which says, what excites you the most about investing in Africa? The first option is potential for higher returns. The diversification of investment portfolio, impact investing, innovation in fintech and other emerging markets, and the fifth option is, I don't invest. So what excites you the most about investing in Africa? Okay, I can see that the feedbacks are coming in, the responses are coming in. Please, let's keep that going. Let's keep that going. Let's keep the responses coming in. I can see that potentials for higher returns are topping the charts. I mean, your investments, it's every investor's desire to ensure that their investment is bringing in, you know, potential higher return, which is a good thing. It's a good stand. So that's very amazing to see that it's topping the chart. I can also see diversification of investors portfolio, which is actually very good. So let's keep our responses coming in. We have 54% of our participants have sent in their responses, and you know, that's good to go. All right, thank you very much everyone for participating in our poll, and this is the end of our poll session. And we are going into the moments that we've all been waiting for, the countdown we've been putting out there, the sign-ups we've been engaging with, the information that we've been putting out there about the webinar. Now is the time to engage with our webinar, and now is the time for the moments that we've been waiting for. Right about now, before we bring in KO for his life investments webinar, we would like to share a profile of KO so we are abreast and have an idea of who KO is. So, KO is the CEO and Chief Investor Officer of Opportunik, with a strong background in venture creation and investment. Kola has founded, co-founded, and invested in several companies. He led Vinian Group for over a decade, which was recognized as one of the 100 companies to inspire Africa by the London Stock Exchange Group. He's an alumnus of Harvard University. Kola sits on the board of numerous companies as a director and an advisor. Is on a mission to bridge global capital in Africa's with Africa's opportunities. Thank you very much, KO. You can have the floor now. Thank you.
All right. Hello, everyone. Good morning, good afternoon, good evening, depending on what time zone you're in or where you're joining us from today. My name is Kola Oyeneyin, and it's a pleasure to be speaking to all of you here. I think I've seen pretty much where different people are from my count. It seems like we're in maybe about 10 to 12 different countries, with some countries taking more taking the lion's share of the attendees, but at least we're spread across different parts of the world and different different locations. And so it's good to connect with you all. And hello everyone once again. First, let me begin by just saying a huge thank you to the team. Really and truly, on a day like this, I just show up and do what I know how to do. But there are people who have been working really, really tirelessly behind the scenes to ensure that we bring this webinar to you live today, free of charge. So could you please just help me appreciate the Opportunik team across different parts of Africa, where they sit in Botswana, South Africa, Nigeria, Kenya. Let's just say, thank you to the team. I really appreciate the work that they've all done to get us here today. And I'm deeply deeply proud of the work that goes into some of these sessions as we plan them every now and again. I put out something yesterday on LinkedIn, and I think I want to just reiterate that I absolutely actually love to do these sessions. I love to teach. And teach not from a place of just loving to talk, but I think that there is something about trying to show people perhaps what they are missing, or what I found out, or what I know, and I feel that they should also know. And because I find that over a period of time, when you do certain things consistently, they have the ability to produce a result regardless of which environment you're in or under any circumstance at all. And so that's what I'm here to share about today. And once again, welcome everyone. Let me first quickly say that this webinar is not a webinar. We're not on this call to sell anything. We're not selling financial products. We're not selling financial instruments. We're not marketing anything to anyone. We're simply saying to you that we're sharing an opportunity to really learn, particularly for an industry, for people within a particular industry that we believe very strongly that there's an opportunity for you to build wealth and do so very quickly. Now, it was exciting to actually see people who are not in the oil and gas space to come into today's session. So really and truly, why the content has been tailored specifically, and some of the languages that I'll be using will be speaking to those in the oil and gas sector, and some of the things that you'll be seeing will be speaking to them. It doesn't preclude anyone who's not from that sector. And so for those who are in tech, in financial services, in insurance, that I've seen education, there's a common thread across everything I'll be sharing today, and it's about knowledge, about financial. It's about financial education, wealth building, and also a mindset of legacy building and shifting from hustle to legacy in a nutshell. So regardless of who you are, this is for you. Now, for those who we crafted this webinar specifically for, and for those that are in like other sectors, there will be, for instance, webinars crafted specifically, for instance, with tech bros and tech girls, or what should I call them, very soon. But for those in the oil and gas sector, I want you to please pay particular attention, because there are certain things here that you would get almost immediately, simply because this is about you, it's about your industry. When I'm using the words like rig and I'm using the words like pressure pump, you understand those things. Even those that are not on the rig, you know what they mean. Even if you spend most of your lives in the office, you know what they mean, and you can relate with that. And so with that said, I think we should go straight in. I'll spend about maybe 30 minutes speaking. If I can do it shorter than that, I will try. I will move very fast. The content is quite a lot. We're going to have a live demo session. So I'm going to try as much as possible for everyone and construct a live portfolio for you. So get your pen and paper ready. This is not the kind of webinar that you come on and you essentially just listen in without taking some notes. Yes, you might get some things out of it, but there are some things I would share that you have to go and almost personally try and redo yourself. Now, sessions like this, typically, people sometimes put them up and they charge for it. They charge for people to come and attend it, whether in person or online. But for us at Opportunik, we believe very strongly that one of the biggest issues we have in Africa is that, investors don't really have information, and knowledge is really scarce. And so we believe very strongly that in order to fulfill our mission of unlocking prosperity for people like you, for Africans, it starts and ends with education. That if you can really become financially educated and you understand the power of capital and you know what to do with it, and you know how that is powerful enough, and the capital is powerful enough that it can actually go ahead and work for you, then you will take sessions like this very seriously, and you take the outcome of it in terms of application also very seriously. So with that said, now let's look at how African oil and gas professionals can build financial independence beyond the rig. Now, there are things that, we need to first sort of like maybe put out there so that you're aware of. Number one is that this webinar is for educational and information purposes only, and does not constitute financial advice. All investment decisions that you will need to make should be made based on your personal objectives, risk tolerance, and in consultation with a licensed financial advisor. Please take note of that. Now, you earn well, but the big question in the room is, are you free? And the truth is that, true, oil and gas workers earn very well. Many of you are paid very well across, regardless of the countries that you're working in. But you spend your years rotating, offshore, managing complex projects, negotiating multi-million-dollar deal. Your salary proves your worth, absolutely. But when you step away from the rig, or when you step away from the shining, skyscrapers for those that are joining from the US, from Texas, step away from it, from Lagos, from Rivers, from Joburg, regardless of where it is, the key question remains, are you really free? Now, the responses I get to this many times when I ask people in oil and gas is that they say, well, my salary covers my house. If I'm paying rent, it covers my rent. It covers my children's school fees, whether you're male or female, it doesn't matter. And I live a pretty good life. I'm pretty good. I can afford anything I want to buy. I can travel when I want to travel. I might not be able to do multiple first class, business class, or upper class travel every year, but I mean, I can get by, and I'm fine. But the question I always ask them, and some of them are sort of like within my network, is that, but majority of them always feel this sense of unease about life after 60. Now, 60 here is a very loose number, and I'm going to use 60 just as a benchmark because a lot of people talk about retirement age about 60, 65, but let's stick with 50. And I've used 60 to be able to help bring the conversation to a point. There are some of you on the call and say, okay, oh, come on. I'm not going to retire at 60. Even when I retire, I'm not tired. So I'm going to still be doing stuff at 70, at 75. Some of you want to work till you are 90. You're Warren Buffett. I greet you, Some of you want to work till you go to the grave. That's good. But some of you, you're retired, but you're not tired. You still want to do stuff. That's fine. But the whole point of retirement, what to really just understand about retirement is that you can choose to retire at 40, but you're not tired at 40. You can choose to retire at 60, but you're not tired at 60. The question is whether you do it at 40 or at 35 or at 60, can you do so comfortably without thinking about it? The second question to ask is, if today anything else happened like it happened in 2008 global financial crisis, or Iran and Russia and all of these global crises just get escalated, and oil and gas companies are now cutting, OPEC is cutting production and oil and gas staff are being sort of like laid off, and you're part of those. Can you be out of work for 6 months, for 1 year, for 2 years, and be fine? And house rent still paid, school fees still paid, and you're still living a good life? Or let me stretch it a bit and say, you know what, you're tired of working. You don't even want to work. Nothing has happened. Nobody has fired you. Nobody has said you should go. Can you actually decide today to say you don't want to work for 2 years, for 3 years, for 5 years, and you'll be fine? Now, if that question is no, this is for you. Pay good attention. Now, of course, that everything I just said now, while it describes people in the oil and gas sector, it also applies to everybody on the call. For those that are working, even as business owners, if you step away from your business and for any reason the business is not able to pay you for the next 2-3 years, are you able to survive? If for any reason you stop working today simply because you just want to, are you able? How long can you last for if your current paycheck is taken away from you? So when the paycheck stops, does your life slow down? That is the question here. Now let's look at the average age of, average length in oil and gas sector. It's about 25 to 30 years. So most people will tell you that they spend about 25 to 30 years within the space. When they are leaving, they get paid some nice package and stuff. And that package can last them for maybe another 5-10 years, depending on how diligent they are with it. And then, average lifespan, depending on which country you're in, if you're African, and which country in Africa, you could be 55, 60 years life expectancy. But let's assume that you live very long and your life is good. Let's say it's 75 to 80 years. So you can begin to see now, at what point a retirement could be and how many years are you going to spend in retirement. So let's assume that you retire at 50 and you live at 60 and you live till 80. So that's 20 years of your life in retirement. And remember what I said about retirement? It doesn't mean that you're not working, you're still doing stuff. Some of you have great, I know some of you are not thinking about grandchildren yet, but you're going to have grandchildren. You're going to have great grandchildren. I thought some people would say amen to that. It's not a service, but I believe that you're not going to die young. So very strongly. So you believe that you're going to live very long. And you don't want to be the grandpa, the grandma that they go to his house or her house and the kids just leave empty-handed because the grandpa doesn't have anything, grandma doesn't have anything, So really, but grandpa used to work for Shell, ExxonMobil, used to work for, SLB, used to work for, whatever, all these different oil and gas companies that you guys know. What happened? Something happened along the way. So please pay attention to this sort of like time stamp between these guys. So you have one active income stream, no rig, no rotation for you, no paycheck. Or if you're the one sitting in the office, if any crisis happens, there might not be paycheck as well. Now, retirement without income planning is like drilling with no pressure gauge. Again, I mean, I'm sure you understand that language. If there's no gauge you can drill from now to tomorrow, nothing will come up. That pressure gauge is what tells you what's under and what pushes crude up. And so this one active income that you have is extremely important what you do with it. So that when you no longer have any rig to stand on or any nice shiny corporate office, project management that you currently do, or quality control, procurement, the different units that you're in within your industry, and no paycheck anymore, what then happens to you after that? Now let's quickly look at this. Pay attention to what is on the left. On the left is, monthly salary. And this is, depending on which country you're in. And again, please, the number here is very loosely taken. So don't, it can be anything for you. It could be, I know some of you are on $20,000 a month in salary. Some of you are already on $100,000. That's fine. But we benchmark it against $8,000 to $12,000 monthly salary. That is the current income cliff that you're on. But see how you can quickly jump down from that cliff by the time you retire. You could literally be earning zero or to $1,000, maybe $1,500 a month, depending on what you've done. And this is, by the way, based on data that we have seen from people who have left oil and gas industry sector. They no longer earn salary. They have some pension for investments and the pension was just paying them $1,500. They were getting something out of it. The cliff was so sharp, like they dropped immediately, and you could see it in their lifestyle. You could see it in everything that they were doing. Some of them didn't even have a house that they had bought before then, and it became a challenge. So the illusion of high income, like most oil and gas professionals earn above national average, that some people can only dream of, but few build lasting wealth. The conversation we're here to have today is around building lasting wealth. I think there are about 2-3 sectors where the kind of pay that you guys have, I mean, it's almost insane. Consultants, particularly those that are in the Big Four, BCG, McKinsey, and Co. Those guys are like oil and gas people. You guys are on serious pay. But then what happens typically is after that is over, with what we see is a sharp drop between what you used to earn and this. I think tech guys are coming into that space now, but it's few and far between. Then, of course, like I said here, high income often leads to high lifestyle. So there's a lifestyle that you build when you're on high income. You fly whatever you want to fly. You go to you guys know the lifestyle that you can have, because at the end of the day, on the 21st, 27th of the month, that paycheck lands, and when it lands, all is well with the world. What happens when it stops? Because the challenge is that high lifestyle does not lead to high net worth. So many times we haven't built high net worth. So this lifestyle inflation hides the cracks until retirement approaches. Most people, when they are 5 years away from retirement, you start to see it show on them that, oh my God, the inevitability, the sound of inevitability starts to creep in gradually, because in a few years' time, this paycheck is going to stop, and they look back and wonder where the 20 years go. I'm here to just help you avoid that in terms of just planning way ahead. And and the truth is that for those that know me very well and those that know what I personally stand for, and of course, what Opportunik as a company and as a fund has been built around, there are no fluffs there. This is not some PowerPoint stuff to say, oh, just come and hear this guy who knows how to talk about, finances and wealth building, but he hasn't practiced it himself. I think if you look at the trajectory of my life, for those who have been following for the last 15 years, plus at least, you pretty much, many people, if you're either Nigerian, you live in America, or if you're African, you can trace my life. And so I come with that, all of that behind me. I come with the experiences of seeing startups start from zero market capitalization to $3 billion. I come from the background of seeing companies having zero structure in a country and building a national structure that employing thousands of people. I come from that place. So I've seen it. I've seen too many things, and I've also seen company founders who raise good money, $40 million, $50 million, and founders got paid well, and the companies died. And I've also come from a background of seeing professionals like you have conversations with me and maybe at 55 and wonder, where did all the time go? How did I not put some things behind? So I'm here with all of that to say no fluff, no. I can be as frank and as direct as I can be with the experience and data to back it up. So this is not thankfully you're not paying. So this is not this is not a master class or say, if you don't come for this, you don't need to go to Harvard. No. You go to Harvard, go and get what Harvard can teach you. Go to Yale, go and get whatever Yale can teach you, but also come to the School of Hard Knocks. The School of Hard Knocks is what teaches you to avoid knocks in the future so that you don't knock down. Very important. So this could be sort of like one of those School of Hard Knocks where you hear truth, you hear what it actually takes to build with intentionality. So that's what this is about. And so this lifestyle absolutely hides that crack. So your current paycheck funds your lifestyle, but what will fund your freedom? When I talk about wealth building, don't talk about it from a standpoint of freedom. What is the price of your freedom? What would it cost you right now to be free? Some of you are managing where you're working, you're managing relationships, you're managing, and simply because you can't, I think a friend of mine said that you cannot just, sorry for those that are not from Africa, you cannot just vex and just go. Your level of vexing is directly proportional to the price of your freedom that you've paid. Have you paid the price of freedom? If you vex anyhow, you could be literally out of work and that paycheck could be gone almost immediately. I think it's very important to know that. Now, how much will you need at 65? Let's assume that you retire at 60, and then you're now, heading towards your 65 years old at 65. What does this look like in terms of what you need? Now, this is different from different people. So I'm not here to say that, one size fits all here. So at 65, you're already retired. Your annual income is, say, now about 14,400 based on the data that I showed earlier on. Your child support, but however, your house and utility needs could be as high as anything you want it to be, depending on your lifestyle and over the 30-year period, 400 and something thousand when you put it all together. Of course, you can run your numbers, and we're going to see some numbers that will run. For the entire period, you could have your, child support or children's support, whatever it is to be this amount, and for the lifetime of your 30-year retirement period, 280, and it goes on and on. Emergency, travel and leisure, healthcare, all of those, there's a price to all of them. And you need to do that work now when you still are able to figure out what is this amount that I'm going to need for my 30-year, 20-year retirement period, right? So let's quickly just go into what I call time buckets. And now we're going to go into some practical sessions soon. But these time buckets will give you an idea of what you can begin to think about from today. So there are 3 buckets. The first one is this bucket that I like to call the 0 to 2 years bucket. The purpose of this bucket is for liquidity. You want to be as liquid as possible. The assets here is emergency cash, savings account, short-term USD bonds, so that you need money very quickly, you can get it out. The goal here is 3 to 6 months of living expenses that you put in this bucket. Think of it as an oil and gas person. This is fuel for your immediate operations. Everybody must have this bucket. You don't have liquidity bucket, you're going to struggle. There are people that, they have no liquidity bucket. Every single time there's crisis, they are looking for urgent $2,000, right? So this liquidity budget, you must build it. So please write this down as a bucket that you must have, that I have to just be liquid to fuel my immediate operation. The second bucket is your soon bucket, which is, 2 to 7 years. Now we're moving now to a framework that gets you start to think of, okay, this is where I am. I have my liquidity bucket, which is my now. Soon, this is where I want to go after this session with after I've stabilized it. But this is for growth and stability. The assets in this bucket is usually dollar hedge equities, dividend stocks, rental property, so that I can earn some rental income, REITs, and the list, can be endless, but I've just put examples here for you. Now, of course, the goal here is for capital appreciation with some income. And here, analogy for you to remember in oil and gas is steady midstream production. You just want midstream production, no disruption at all. You just want it to keep coming, whether you're working or not, is right there, and it keeps coming. Now, the third one, I call it the later bucket. Now, the later bucket is an interesting bucket because this is now for legacy and high return plays. Now, here you want to be a bit more, and this is for 7 years from now, thereabout. Assets in this space is private credit, infrastructure, and some of these things you can ask me what they mean. What is private credit? What is infrastructure investment and things like that. Then you have frontier funds, long-term real estate, etc. The goal here is to now begin to multiply wealth. Now, there are 3 M's of money that I always share with people that I think you should never forget. 3 M's of money. The first M of money is the ability to make money. Every single person on this call, whether you're an entrepreneur in oil and gas sector, financial services, regardless of your industry, one thing you know how to do is that at least you know how to make money. Your education has earned you the right to make money. So you know how to make money. You know how to make money. You get a salary. The second thing is to move from making money is to manage money, the ability to manage money. And then the third part is the ability to multiply money. Statistically, 95% of people have the tendency or ability or what it takes to make money. So most people are stuck in the making of money. There are 2-3% of other people who move from making money to managing it. So they don't spend everything. They know that they should put it in different buckets, emergency buckets, 10% for this, 5% for that. And then you have this selection of 2% thereabout of the world's population that just have figured out how to multiply money. And what I'm here to teach you today is how to get from M1 to M3, where you're going from making money to not just managing it, because managing it is not enough. Managing it will not buy you freedom. Multiplying it is what secures your freedom. Now, this is where we're going. You want to become the architect of your own wealth. You want to move from worker to wealth architect. Now, how did that happen for me? Over a long period of time, what I did was really to start by saving just about 10-15% of my pay into low-risk instruments. And by pay here, I mean, some of you are entrepreneurs. Traditionally, I've always been, I think at least 85 to 90% of my life, I've been a founder of one business or another. So I've been an entrepreneur. So when I say my pay here, director pay, which might be different from yours, a basic portfolio, early stage of bonds and dividend stocks to just earn something no matter what over a period of time from it, and just leave it and let it compound over a period of time without doing heavy lifting myself. What this has done is in over this period is to leave it over a 10-year, 12-year period at 7% annually. You will see that your portfolio would literally double. Would double, and then you leave it again and it can double again. Of course, you can double your portfolio in 2 years. There are people on Discord, 2-3 years, as we say, everybody is always Vision 2020. I know there are people on Discord who are saying, oh, I wish I bought NVIDIA. I wish I bought NVIDIA 3 years ago. I wish I bought NVIDIA. If you had bought NVIDIA 3 years ago, you would have doubled your investment or even like 3x it by now. But how many times do you find an NVIDIA to buy? How many times do you find a Palantir to buy? And I'm not here to name check companies, but I'm just saying we always sit around. Most people sit around waiting for that one chance. I wish I bought crypto. I wish I bought Bitcoin in 2010 when it was $2. Now it's 120,000 today or so. Stop waiting for those moments. It may never happen for you. It may never happen. If it happens for you, that's fine. Where you find the next NVIDIA today, and in 5 years' time, you're now a millionaire, or you found the next company to invest in today, and in the next 5 years, they've exited or they sold them, and you exited at 5x. What if it doesn't happen? So first is let's start with discipline first. Let's stop trying to just roll up a skyscraper in one day. Let's move into being a wealth architect. So this is what the graph for quiet compounding curve, this is what it means. Literally, gradually from 0 year to 20 years, you can take $100,000 and turn it into $400,000 without doing too much work. And of course, you can do it shorter than that, but I'm just being extremely, extremely conservative here. And I'll show you how in a nutshell. So passive income isn't luck. I actually don't believe in the word luck. The harder I work, I like to say, as someone said, the luckier I get. Everything requires hard work. It's quiet discipline. It's repeated over time. There's a book by James Clear that is called Atomic Habits. Talks about the power of very small habits every single time. If you say you want to run 10 hours every single day, why don't you start by walking 1 hour every single day? Or you want to run, because at the end of the day, you might not be able to run 10 hours every single day, but you might be able to achieve walking 1 hour every day, and you will build up momentum from there. Every year counts. So this is a quick exercise for someone here. You don't need to put the answer out there because we're about to go into a practical session now. Please look at 65, 65, and subtract your current age from 65 and write down the answer. Don't put it in the chat area. If you want to put it in the chat area, go ahead and put it so we know what your age is. Let's do quick maths. So write it down because we're about to go into a session now. 65 minus your current age. That is now the age that you have left to build your legacy engine. 65 minus your current age. Write it down somewhere. Okay, so portfolio construction 101. At the surface, what you see is cash and savings. At the middle part of it, you see equities, real estate, and many of the things that you guys are mentioning earlier on. Oh, wow, you're over 65. Thank you for sharing. Then subtract your age from 65, sir or ma. That is what you have left. So if you're over 65, let's assume you're 70, we have minus 5 years. So we might be behind. But being behind is not a problem. We can always catch up, and that's why we're here. I appreciate your humility, and I appreciate your openness to be here, and we can catch up very quickly. I've seen people at 65, at 70 do incredible things and enjoy it for 20 years before they go. And so the deep water is private credit, infrastructure. These are areas you might not know, but mid-level are things that you know around here. So don't just drill for income, build an engine for wealth. So let's quickly look at this very quickly, and then we'll go into our live demo for the day. There are buckets here that I've now, remember what I did earlier on, your now bucket, your soon bucket, and your later bucket. This is a quick portfolio construction. And across these different buckets, you can see what you can do with each one of them. Asset type, allocation, percentage allocation, instrument examples, and then percentage returns. And here I have assumed a very, very conservative position that your now bucket, cash, USD, money market fund, bonds, etc., put 15% of the capital that you have in there. And then the type of instrument, everything here is, by the way, on USD. Again, because we're speaking to a broad audience, you have different currencies. I couldn't be switching from shillings to CDs to Rand to Naira. So please just take USD, and I strongly advise that you stick with USD for a number of reasons that I can speak to later. So 3 to 5%. Your soon bucket, equities, REITs, dollar, ETFs, 50%. And the reason for this is that you need that base to be very solid. And then so VWO is S&P 500, is an ETF that tracks S&P 500 companies. These are the largest 500 companies in the US market. I put here for those that are from Nigeria, you could do, NG REITs, you could do SA REITs, you could do REITs across Africa. And then you want to then put some dividend stocks within this space, and you need about 6 to 8% return from here. Now, your later bucket, if you then have, forgive me, you then have, private credit, infrastructure fund, you put 35% there. It could be an Opportunik Zambezi fund, It could be private debt. It could be real estate asset. The beauty of this last one is you can earn as high as 14% in a month. Sorry, in a year in terms of return around this whole place, and that helps you to sort of I see the question, 15% of what? It's 15% of the total capital that you have to allocate. So if you want to allocate, say, $10,000, 15% of that is, is $1,500 that goes into that bucket. 50% is $5,000, $5,000. 35% is $3,500 that goes into that bucket. The average return on this investment annually, when you put it all together, it's about 8% there. It's about 8% thereabout. But ignore all those things under it. We're going to go into a session now where I then show you what this means in terms of actual live construction of REITs. The full meaning of REITs is real estate investment trust, investment trust fund. Let me know if you can see my screen in a minute. I would then go in and I'll share with you potentially what you can do from here. Please let me know if you can see this. You should be able to see a spreadsheet on your screen now. Itoha, could you confirm that you guys can see?
Yes, Kyo, we can.
Okay, fantastic. Now, please pay attention. This is very, very important. If you got nothing out of this session today, this is what you came for. What I've done for you is to give you a bit of pre-work. So don't worry, all those questions you were asking, it comes live here. I have two people here. One person is called Charles, the other is called Margaret. Their current age, they are both in oil and gas. Current age, Charles is 40 years old, and Margaret is 50 years old. I am assuming key assumptions that retirement age for both of them is 60 years. It could be 65 years. You can change that to 65 years. It really doesn't matter. But let's take 60 years as and that's because 60 years is in my head as, the age of retirement that most people in this generation tend to want to go for. If you're 40, 50, Charles has 20 years left. Margaret has 10 years left based on their age currently. And you could have somebody who's above that. It means that they need to work. Extra. So they have sort of like retirement age and how much they need between now and when they retire. So post-retirement, Charles needs about $75,000 annually to live. Now, please, this number is not a constant. It's a variable for everybody. You can calculate yours. In fact, there are people I speak to and I say, okay, I've looked at my life, my family, my wife, my husband, whatever. I feel like at the end of for a year, if I can get an investment that can return $50,000, we're fine. I mean, I can, have some investment for school fees already. I don't need a lot. So you need to work out yourself and project forward and say at 60, or let's not get to 60. Let's say between now and the next 10 years, if you choose to retire, because people are thinking 60 is just so far. I don't see it right now. Forget 60. Say between now and the next 10 years, you want to be able to be financially independent, free. So if anybody says there's any crisis anywhere, start packing your things and go. You can go with your full chest and be fine. What is that amount that you can live on 10 years from now, that all things being equal, plus inflation or whatever it is, should be fine? So Charles calculated his, and Margaret, this is one assignment I give to everyone who comes to talk to me about or do a wealth planning session with me. We have to go through this exercise. You come with it yourself. You will have listed all the things you'll be spending money on: rent or mortgage, children's school fees, travel, holiday, down to how much you're going to make your ladies, your what do they call those very expensive wigs? Sorry, ladies, can you remind me? There's a name they call it, very long.
Bone straight.
Yes. Yes, bone straight. The cost of your annual bone straight, put it there. The cost of your Chanel bags, put it there. Men, you want to go for Abu Dhabi Grand Prix or Monaco Grand Prix. How much is it going to cost? You want to go and watch, Roland Garros, how much is it going to cost? Yes, health insurance. Put it there because, this is where people go for vanity, right? They don't put the things that they really wanted. So they construct a portfolio that doesn't really meet the requirements. So put everything, be as detailed as possible, but don't inflate it. Don't make the mission impossible, make the mission realistic, right? So he has calculated this and he says that $75,000 I'll be fine annually. And then Margaret says at $100,000, I'll be fine annually. You can see that Margaret seems to be, ladies, maybe maybe you might need more than men upon retirement. But so the question is now, how do we get to this point in terms of what do they then need to have in 10 years' time when they choose to become independent or free to be able to generate $75,000 or $100,000? And then can I also shock you? Do you know that there are investment companies today that if you give them this amount, this is what I put there, upon retirement or upon this decision, there are investment companies today, and we can have that conversation even with us, that you say, I have this amount and I want my return that I'm supposed to get in a year's time. I always want it ahead. So I'm starting today, but give me my $75,000 today, take and go and work with the money. There are companies that do that now, or give me $100,000. So you actually have money to work with from day one, and they then go and invest. So it's called pre-investment returns. So it can be worked out. The return might be lower than what you get if it comes after, but it happens. So it means that you can actually go with this money. But what is that money, right? So you will see on my right-hand side where I put key assumptions. Required investment that you need in 5 years, in 10 years. It could be for school fees. Some of you might apply this to school fees. I'm trying to pay $100,000 in 5 years. What do I need to invest today? Or what do I need to invest at some point to get $100,000? So here he says required investment equals income needed. What is the income needed? Let's do the math very quickly. Income needed for Charles is $75,000. He said divided by the rate of return, the annual rate of return. What is the annual rate of return that we want for this? Now, the annual rate of return, we've chosen something very, very conservative. We say 8%. So we want to be able to get 8% annually for the rest of my life on this money. And by the way, when I die, my child or my children will take over this investment and it will continue, we'll continue to pay them as well. So it doesn't end with me. It continues to pay unless they choose to take it down. So what is this amount? For Charles, the magic number is Charles needs $937,000. By the way, this could be lower. You could come here and say, oh, look, I don't need $75,000 every year. I need $20,000. So 20, 1, 2, 3. So for me, it's $250,000 that I need. Somebody says, oh, I actually only need $12,000 per annum. So look at what they need. They just need $150,000 put together, invested over time. Now, how do you get to this $150,000? Is those 3 buckets that I showed you earlier on that you've constructed over time, or your savings from your salary, or one big bonus that you got paid that you then take and put down, and you can resign today and know that at $12,000 payout annually, you can fix a $150,000 investment at 8%, and you will go home happy. But let's go back to what Charles said so that we don't take away from Charles. Charles needs $750,000. But what does Margaret need? Margaret needs, let's come to this place and see what Margaret needs. Margaret needs, again, $100,000. Look at the maths. Income needed divided by rate of return. What does she need? She needs $1.25 million today. Or in 10 years' time. So Margaret wants to retire in 10 years' time, to be able to earn $100,000 annually, and she needs to build up 1.2 million. Charles has 20 years. Obviously, Charles has more time on his hand than Margaret, but Margaret needs more money than Charles. Margaret needs to work extra hard, but maybe Margaret is already a senior manager, an executive at Mobile, at Chevron, so really, maybe she can already achieve that at SLB. Margaret is already doing really well. Now, there are 2 parts, and I'm almost done here. How do you get to this place? Please pay close attention. There are 2 parts that can get you to this place. So now that both of them know how much they need, and like I said, you can make it simpler than this, you can make it longer than that. But let's see, how much do they need? How do they get there? This is Path one, I assume again that you can see my screen. So let's begin. Now, let's assume that both of these guys have made a lot of money already in oil and gas space. They've been sitting on cash, and Charles and Margaret don't have a problem with money. It's just that until this webinar, until they heard KO speak, they didn't know what to do with money. They didn't know how to multiply money. And so Charles already has 920. Sorry, Charles already has, Charles' target is $75,000 in terms of target is already here. And Charles wants to get $75,000, which is the target. And then we say, how much does Charles need to start with today in order to get to this point? Let's assume an annual return of maybe about 9%. Let's be a bit aggressive and say we can get 9%. And Charles, remember, Charles has 20 years to start. Let's put 20 here. How much does Charles need today? Look at the, sorry, the magic is, sorry, the number is 920. Sorry, 937,000. 1, 2, 3. How much does Charles need? Charles needs $167,000 today, just $167,000. If Charles has $167,000 today, he can forget it in an investment that is doing an average of 9% over a 20-year period. And I can tell you at least one investment that will constitute, if Charles puts that money in S&P 500 and forgets it there, over an average of 20 years, it averages to about 9.1 to 9.5% annually, and Charles will land at $937,000 in 20 years, starting with $167,000. If Charles needs less than that, he can also do it. But let's come to Margaret. Margaret needs $1,250, $1,250 million. And we come here and say, right, again, assume the same return amount. How many years, let me see whether you're paying attention. How many years does Margaret have? How many? Excellent. Oh my God, you guys are, I can finish for the day. You guys are wonderful students. Wonderful. All right, all good, all good. Now, who can guess no, let me go back to this place. Let's do a single investment first. We're still doing single investment. So let's assume that both of them already have good pay. They are, in fact, they are expecting a big bonus. So we now know that when Charles gets his big bonus, he needs to take $167,000 and forget it, and Charles can be financially free in 20 years, right? Margaret wants to be financially free in 20 years. How much does Margaret need immediately? Now, I've left it at 20 years. But before I change it to 10 years, calculate it. Who can tell me how much Margaret needs today? Because she has less time. How much does she need today? Let me see who knows the maths. Quickly. 3, 2, 1. No one. $450,000. Let's see. Voila. At 9%, Margaret needs $520,000 today to get to that amount easily and calculate. That's what it needs today, right? That's what she needs. And I mean, you can adjust the numbers. Let's assume that she's getting 12% return. It can be lower than that. Let's assume that she increased it to 15 years. It can be lower, but you get the idea. Now, let's say that, okay, both of them, and many people on this call don't have that kind of money to put down from day one. So let's go back to Charles. Charles needs $937,000, at 9%. But Charles wants to invest at the end of every year because Charles gets good bonus in December. And Charles wants to invest over, remember, how many years does Charles have again? 20 years. So we put it, how much does Charles need in December of every year or January of every year? Voila. Just $16,000 at the end of every year or at the beginning of a new year, invested annually over a 20-year period, will land Charles at $937,000, and Charles can be home free. Let's say, Charles, you are too slow. Let's get you retired very quickly. Let's make it 10 years. Charles needs $56,000 at 10% very quickly to get them. Charles, let's be a bit more aggressive, and let's say you get 10% return annually. Charles needs 52. Let's say Charles gets 12% annually. Sorry, Charles gets 12% annually over a 10-year period. You can see the difference. And then let's quickly, as I wrap up, now see what Margaret needs in the same period at 9% over 20 years. How much does Margaret need? Margaret needs almost twice the amount, $20,000 annually, consistently. And both of these people will finish their career with a bang and will be well off as far as retirement is concerned, and will have no reason to worry any longer about life. So let's see what does this mean in terms of everyone on this call as we bring this home completely. Now, the beauty of what you've just heard right now is about the portfolio construction that we have done. We can test this portfolio and say, right, what this thing that I've said, where can it go into? I've already told you like the different buckets that it can go into, but the beauty about the portfolio is that is a currency. The currency is hedged against the dollar. If oil price crashes, you're diversified across sectors, no worries. Medical emergencies, you have the now bucket that can cover that because you already have something that can fuel you. Early retirement, you already have the soon bucket that can start the cash flow depending on what it is that you want. So at any point in time, look at this all like portfolio construction, you're almost ready to go on and be ready. Now, I know I breezed through this very quickly, and that's the work. This is high level to also like present to you and show you how, I won't say easy, but how deliberate you have to be to create the journey, but you don't have to do it alone. So build your wealth dream. I've had to do mine at some point. Who are they? Wealth advisor. There was a time before I became a fund manager where I had a wealth manager, US-based wealth manager, look through all my finances and say, okay, we should put this here, we should put that there. So have one. Very important. Have a tax expert to say, well, why don't you put this in a trust? Why don't you use a trust to invest it? Why are you paying so much tax on your bonuses? Why don't you ask for a company to do this instead of doing that? You need one. And the beauty is that all of you in this sector can almost afford some of these team members. Now, this team that I'm talking about, pension consultant. What is your pension fund that you have today? Some of you might have access to it to unlock some of it so that you can invest it. Somebody was asking earlier on that, their pension is just sitting somewhere, it's doing nothing. Talk to a pension consultant to see whether we can unlock a part of it. Oh dear. Have a good lawyer. Have a good lawyer. And the beauty of it is that you already work in a company where there are some good lawyers who are your friends within the company. But make sure that they are not conflicted and they give you good advice. But get a good lawyer that would ensure that, your interest is protected. When you have all of that, and of course, global investment partner, I dare say, like Opportunik, that can literally just sit with you and sort of like help you to construct a viable portfolio without trying to necessarily sell you anything. I always tell people like you to don't go and talk to people who the first thing they are thinking about is that, oh, we need to sell you, go buy this product, buy that investment structure, buy. No. Let them understand your unique circumstances. How many children do you have? How much school fees are you paying? What is your lifestyle at so time? How many times do you go on holidays? Do you believe in summer holidays? Do you believe in winter holidays? Let them sit with you. Don't just buy products. Of course, there's a place for knowing you've done the portfolio construction like I did, and you know that 50% needs to go into so fund and all. So, like I said, I once tried to do this myself, then I realized that building wealth without a team is like drilling without a rig. Some of those things are very important. They save you a lot. Now, your next step as we wrap up is this. We don't want to just leave you hanging by yourself. Some of you reach out to us every now and again. So we felt that it was important to just give you an education first to just get you started. And so for those that are in the oil and gas space, complete a 3-minute no pressure investment plan and assessment, with us. This form, scan it. What this does for you is that for those who have investment to begin today, maybe you've even worked it out. You feel like, you know what, I have $10,000 or $20,000 to begin today, but I want to sit with this. I want to sit with a wealth advisor, a wealth planner to help me think through it. This is where we want to help to do that. Some of you will qualified to talk to me directly, depending on what it is that you need. I'm not promising, I'm not promising a lot of slots, but I do have a few slots open that really to just almost have this online session with you and understand what your specific needs are. 20 minutes, 30 minutes or so. Again, is free of charge. And you might ask, why are we doing this? Our mission is very simple. We want to unlock prosperity in Africa. We believe that until we get many of you here to begin to think prosperity individually, we cannot think prosperity collectively and as a continent. For us, it's a very important part, and for me, it's a personal mission. And so you book a call with Opportunik advisory, wealth advisory team. Some of them are on this call. They are listening. They will answer some of your questions here, and they will get you going. And then once you're done with the session, almost like what I did for Mary, first for Charles and Margaret, you almost get you receive a custom portfolio design with your income, goals, and timeline. Not products, not, invest in this fund, invest in that fund. It will be specific to what you have discussed, and that becomes what you work with going forward. And then, of course, you can activate it whenever you're ready. I hope this session has been useful for all of you. I'm going to hand it here now. And just say it's been such a pleasure doing this. I find that I enjoy this as much as you all hopefully do. And so let's move on to Q&A now. For those who are unable to scan, the team will put the link in the area, and then you can use it. And so, ladies and gentlemen, thank you very much. And then let's now begin to enter a season of legacy beyond the rig, retire with peace, live in purpose. I look forward to seeing you become incredibly free financially. Thank you very much. Over to you, Rita. Thank you.
Thank you very much, Kale. Thank you very, very much. This was a very insightful session. I am so packed and I am very motivated to go and find my oil and gas money so I can start to invest and, turn my young age into a very huge retirement plan. I have a lot of things written down. The only thing that is left for me right now is to go and find my oil and gas money. And I'm sure that our participants on the call who are not in the oil and gas sector are also motivated to not necessarily move into the oil and gas space, but to also, be motivated to invest their funds and see how they can, quote unquote, relax when it's, their retirement time, and they don't have to worry about buying the bone straight and going for the vacations. Key takeaways for me is the 3 M's for the money, and we all know our faces. I think I'm at the phase where I need to learn to manage and multiply my funds. And I'm sure with more guidance from Opportunik, I'm sure that I can always run to the advisory team and see what I can do. Thank you very much once again, Kale. Amazing session, insightful session. And we do not take all of this for granted. We appreciate the information that were shared with us, and we are looking forward to next steps. Right now, we'll start to take questions. And I'm going to go through the question tab and see if we can get questions to provide responses to. So I can see that most of the questions are based off if they can get the Excel sheet, if they can get the spreadsheets. Those were the questions that were asked. Okay, I can see. Okay, so someone shared a question directly asking, "Good evening, sir. Please, I would really appreciate if you could be part of those who get to speak with my dad. My dad is a businessman in the oil and gas space, and after he died, we've noticed a lot of people are trying to cheat us, and there are some business issues we don't know how to resolve. This is a whole lot, and I would appreciate if you could grant me audience." I'm sure this is something that would pick off the call. We are looking to get questions from the sessions that we have with KO. Definitely, we'll get back to that. Okay, we have a...
Please speak to that.
Okay.
And by the way, let me, before you all drop off the call, there is a tip I want to give to everyone. I get asked a lot, what industry or what sector do I see as a booming sector over the next 5-10 years, where yes, I have 20 years, but can I get there faster in 10? So wait around. Let me see whether we'll have enough time. I'll share it with you. Many of you that missed the AI industry train might need to hear that before you move on. The person that asked a question about your dad in the oil and gas sector and passed on, it's unfortunate. I'm sorry to hear that. So please send us an email. Tim, could you please drop our email address in the chat area so that people can send us an email in the chat area, and then we'll be in touch with you and see whether it's something that is within our scope. If not, we can advise in terms of who's best position for it. Now, Michael is asking, can you share the spreadsheet? Yes, we can share it. If you register for the webinar, we will share the spreadsheet with you so you can play with it yourself and then use that to construct your portfolio directly. So team, please know that. Is this organized by an investment company? Michael is asking. Yes, Opportunik is a global fund. We are licensed and registered by CIMA, that's Cayman Island Monetary Authority, and we're headquarters in Mauritius with offices in Nigeria and Kenya, and our team is spread across South Africa, Botswana, Nigeria, Mauritius, and we have our core regulatory team in Cayman. So that's who we are as a company. Can you watch this session again? The answer to that is yes. Yes, you can watch it again. So for everyone who registered, that will be shared with you. Can we go to the Q&A session and see if I've missed anything so that we can just quickly treat those ones that I've answered. So the ones that we've answered, we can close those off.
Okay, we have most of the questions are centered around getting the spreadsheet and all, but we have a question that was sent privately, which says, from the scenario of BlackRock, what does it mean for someone to have estate funds? Is it different from real estate investment?
Yes. So estate REITs is basically an instrument. So REITs is like sorry, let me just a REIT is like an instrument that I'm trying to stop sharing. A REIT is like having an investment fund that essentially they invest in real estate on your behalf. They invest in real estate on your behalf. So you don't see real estate, you don't see the actual building, you don't see the actual actual building, but the instrument, it does investment in real estate. So that's what a REIT is about. So they take the money, they go and do real estate, and then they pay you back depending on how well the real estate is doing. That's what a REIT is. So it's like it's an instrument, it's like paper. You don't know which company they're investing in, but they're investing widely. Yes, you have to be careful with the REITs that you're investing in. Make sure that you invest in REITs with companies that are regulated. Don't go and do real estate investment trust fund with anyone. And it's not just regular real estate. So for instance, our fund has exposure to REITs. Opportunik Global Fund, as a fund, we invest in REITs, and some of our REITs are companies that are based in the UAE, in Abu Dhabi, in the US. So these are regulated entities where when it's time to pay coupons are paid. When it's time to pay your actual investment back, they're actually paid. So be careful which ones you are picking and which ones you're choosing to invest in. Someone asked a question. I just want to make sure that I want to answer all your questions before you go off. Thank you so much, Keo, for taking time to do this. Please, what long-term vehicles can we invest in? There are many long-term vehicles that you can invest in. One is, again, when you come into this session with us, we can talk about it. There are vehicles you can invest in. ETFs. ETFs are long-term, but because again they are tied to equities, they could be a bit more volatile. But you can also invest in mutual funds, in instruments that are in fixed income products. So fixed income could be long-term, and also highly liquid as well. Again, some of these there are multiple of them, and they are long-term. I heard something like S&P. No, that's S&P 500. S&P 500. Thank you very much. Tobe is asking for a young entry-level worker to invest his level entry in Naira investment. Would you recommend equities or money market? Please, if you can briefly explain the difference between equities and ETFs. So money market or equities, it depends on your risk appetite. Now, the reason I always ask yourself this question, if you invest money and what you invested in in 3 months after that is down by 5%, are you going to sell? Are you going to hold it? Are you going to buy more? If you sell, and before you invested in it, you knew, you did your research, it was very good. But for any reason, for whatever reason, it was down by 5%. If you sell, you are a low risk investor. If you hold it, you are a medium risk investor. If you buy more, you are a high risk investor. So you need to gauge yourself. Are you the kind of person that you don't like anything to touch your money? Like if you lose, if it's down by 0.1%, your body will be paying you. Yeah, you understand what I'm saying? You'll be sweating. Then you're a low risk investor. Just make sure that you look for fixed income, or anytime you're talking to your wealth advisor, you say, I only want to invest in risk. There's no risk-free investment, but principal guaranteed investments alone. And then you have, of course, the difference between equities and ETFs. I think I've said it before. Equities are single companies. So for the stock of a bank, the stock of Nvidia, the stock of Microsoft, those are equities. ETF is an aggregation of multiple equities. So let's say that on this call, there are 10 oil and gas companies. We want to put all of them together, all their stocks together, and we want to name it O&G Africa ETF. That O&G Africa ETF has 10 companies inside it. Depending on the performance of each of them and all of them is what makes that ETF work. So that question is answered. What stock comes in the soon later plan? Well, it depends. So you need to pick and choose. Depends on what works in that place. Again, those are things that you need to go and check which company has the potential to do well that you want to buy and you want to put it inside. It's hard to be able to. I don't suggest stocks that people should buy. It just depends on what you see that maybe in the next 5-10 years will do well. I have a question. I'm yet in the oil and gas place. Did I advise basic financial plan as a Gen Z? I heard so many things like this, but I will appreciate any advice. That's not a specific question, so I appreciate any advice. It's not specific enough. Sorry, Michael. REITs, I think I've already spoken about REITs before. In REITs, do you own the building? You don't own the building. You bought an instrument. You don't even know what they are investing in. Some REITs instrument, they are REITs instruments at the moment that are investing heavily in Saudi Arabia because of Vision 2030. So you don't own the building, but you own a part of the fund that is investing in the building. You said we talk about AI. I'm coming to that, so hang on. I'll talk about that shortly. Well, not AI, but something similar. One of those that have investment fund, can we pull with others in the same category? Oh yes, I mean if you have an investment fund and you want to bring other people along, absolutely you can do that as well. What's the name of your company? What are the merits and demerits of hedge fund? The name of the company is Opportunik Global Fund. Opportunik Global Fund, we're a Pan-African fund. We're one of the first led African fund out of Africa investing globally across board. We're regulated and licensed by CIMA, and we're building what we call the BlackRock of Africa, essentially building what has never been built before on the continent to let people like you be able to have access to global investments. That's who we are, and we're super excited about what we do. What would you advise for a profitable Forex trader in this sense? How does it diversify being active in day trading and swings and all of that? Well, so I would say manage your profit very carefully. So what the challenge with traders is that you always think that you can always make more money. So don't get too greedy and take profit when you're supposed to take profit, and use that profit for actual stable investment. There's a difference between trading. There's a difference between trading and investing. Start with trading, but gradually move to investing. So use the gains from trading to investing. All right. Okay. So for all the other questions that you have, because of time, let's leave it here now. Can one access those investment opportunities on your app? Yes, you can download our app on, guys, can please drop the app download link on the platform for everyone. So you can download it from the app and share and look at all the different products that are there, and then you can pick the one that appeals to you the most. Okay. So many of you missed out on a boom that happened, over the last 3 years or 4 years, and that's the AI boom. And I've had so many questions. People write to me and say, "KO, what do you think is the next big thing over the next 10 years that you see?" And so I want to give you an assignment and say, go and study, and I will try as much as possible every time I have a webinar like this to maybe prepare people's mind for what is to come, what is next. The next frontier, as I see it, and as many money managers globally and fund managers globally see it, is potentially quantum computing. So I want you to go and do some work in quantum computing. There are companies at the moment that are building some of the best quantum computing platforms that nobody has heard anything about today. And it's the same way nobody knew anything about NVIDIA, Palantir, Micron, Supermicro Computer 10 years ago. But in the space of 5 years, NVIDIA moved from $250 billion in market capitalization to $1 trillion. That's 4 times. And then move from $1 trillion to $2 trillion. That's 8 times. From $2 trillion to $4 trillion just 2-3 days ago. That's 16 times, 16x in 5-6 years. The question you want to ask is that who is the next NVIDIA and what sector does that belong to? NVIDIA, Palantir, and all these other companies belong to what you call the AI, sort of like AI, artificial intelligence, semiconductor space and all. And then you also then have the guys of like the likes of Microsoft and Amazon. They're what you call the super scale, the hyperscalers, So again, what is the next industry that is not artificial intelligence? Don't chase what you've already missed. Opportunity gone, forget it. Move now into what is the next frontier. So I'm recommending that you go and spend time reading about quantum computing. Now, I know 5 companies, at least 5 companies that are going to most likely be the ones that will deliver 10x, 15x, 20x in the next 5-10 years in quantum computing space. Unfortunately, because I do not publicly recommend companies for people to buy, I cannot say it publicly here. But if you come on my Substack or you subscribe on my Substack, the team will put the link on here. Every now and again, I will write about it via my Substack without necessarily, I'll mention the names and put the links there for people to go and read about the companies, but they are not recommendations for you to buy their stocks because they can be quite volatile. They can be up 100% in 2 weeks, and they can be down 50% in 1 week. But if you leave it over a 5-year period, you would see that they will turn out the same way these other ones have turned out. Tola & Co, if you drop the Substack link there. So every time I write, you will see it in that place. Now, finally, also, for those who are within a particular jurisdiction, maybe, for instance, you're in Nigeria and Co, and you feel like, you want to invest, but you don't have USD, you could also you could also look at some of we're a group. We have other companies within our group. You could check out our other entities that are within your space and also look at them as an option to invest. So I think I've done enough housekeeping here now. Tola Substack link so that people can join, and then I can write from there. All right, thank you very much. What about those that don't have $10,000 investment? Can they pull funds together? Absolutely, but make sure just know the people you are pulling funds with, and just ensure that you have your terms and conditions completely well written down. I know we're supposed to be for 1.5 hours. We're exactly 1.5 hours and a few minutes more. Thank you very much. I will hang it up here on my end. I want to say that the very best investment you all can make is investment in yourselves. That work begins today. The best time to plant a tree was yesterday. The next best time to plant a tree is today. I wish you all well in your oil and gas careers, and those that are non-oil and gas, I wish you all very well. And the next time I see you, it will be exciting news of financial freedom and wealth and legacy building. Thank you very much.
Thank you very much, Kale. Thank you for providing response to the questions that our participants have asked. We are starting to come to an end of our webinar session. We just want to say a very big thank you for spending your time with us today. We really appreciate it and we value your time. And I know I can say on behalf of all participants that we found this session very insightful, very engaging, lots of takeaways, lots of next step, lots of calculation, lots of retirement plan. And it's very exciting to see that we have all of these plans, after this webinar session. First, just for some minutes, we would love to take your feedback. So please do take out 2 minutes to complete the survey via the link in the chat box. I want to believe that we all have the link in the chat box now. So please let's take out 2 minutes to take the survey. We would like to hear your feedback. We appreciate feedback so much. So we would appreciate if you can take the survey. Let's get your feedback. Let's get your takeaways from the webinar. Let's share what we looked forward to during the webinar session. And if we attain that, comment, feedback, just pretty much you sharing all of your information with us at the survey. So it's just 2 minutes. It won't take much of your time. And we'll look forward to getting your feedback. Also, we would appreciate if you can just drop your biggest takeaway in the chat box. I'd like to read through that. Just very quick, very brief. Just share your biggest takeaways. Mine is the 3 M's of money. You need to make money, you need to manage money, you need to multiply the money. And from now moving forward, I know that that's going to be my go-to. That's going to be my next step after this webinar, to also ensure that I have the oil and gas type of money. And then when I retire, I know that I am quote unquote chilling. So we would have the survey link up shortly. Please just give us a few minutes to put up the survey link in the chat box and we'll be good. Okay, the feedback link is up now. So please do take the survey. It's just 2 minutes. And as you're doing that, you can also share your biggest takeaway with us. I'm going to repost the survey link in the chat box now so that we can give everyone access to take the link again. I've dropped it in the chat box. Just 2 minutes of your time. Take the survey link and also share your feedback with us. I can see, apologies if I don't pronounce your name right. Omozele says that my biggest takeaway is the practical session on planning on retirement in 20 to 30 years. Honestly, that's one of my biggest takeaway also, to see, how I can practically plan myself for retirement. Also, Kemi says that our biggest takeaway is living comfortably after retirement is possible, and the 3 M's. The 3 M's definitely is one that stood out for me and something that I'll be driving with. Precious says that our biggest takeaway is that the best investment you would have is investing in yourself, and it starts now. Thank you very much, Kale, for sharing that with us. Definitely, Precious held on to it. Tinuola shared that biggest takeaway is quantum computing. Definitely, we all like to ensure that we have our data all put together and we can be able to, successfully craft and, build our retirement plan so that we can as well enjoy the after working life and know that, we are all settled. Once again, I would share the survey link, just 2 minutes. Please take the survey. We'd like to get your feedback. We'd like to get your feedback and, just know that we can move forward with the session. Ijayu, my sincere apologies, shared that his biggest takeaway is the possibility of funding freedom through the right investment. Definitely investing in the right, in the right sector is, it's a freedom, financial freedom, definitely. Thank you very much. Thank you very much once again. We really do appreciate your time. We really do appreciate your presence on here, and we appreciate that you made our webinar a go-to in your agenda for today. This concludes our session. Do have a great evening, and we look forward to seeing you at our next event. Thank you very much once again. And my name is Itoa from Opportunik. Thank you very much.